All right, good morning, everyone, and welcome to our Tax Savings Tuesday, where we're giving you any updates and regarding your business life and investment. Today, we're gonna talk about. All right, there's so many things going on in the background. Just want to make sure that our audio is working really well. Okay, today we're going to talk about how safe would be your investment in annuities. Let me share my screen. All right, there you go. Check the virtual background. Okay, let's dive into it. Let me. So this presentation today, we're going to go over with the different, what are the risk benefits of the annuities, and with that, I'm gonna share my screen with you guys. I'm Christopher, a financial planner, and run an accounting and wealth planning company here in the U.S. And let's dive into it. So today we're going to go over what are the different benefits and our trends on annuities. And all right, so we're going to go over with analyzing the current trends in fixed variable and index annuities, the role of annuities in a diversified retirement portfolio, understanding the fees, risks, and benefits associated with annuities. So, by the way, this will only take less than 30 minutes on our agenda, and this has a replay on our YouTube channel. Go to Chris Wycoco and subscribe to watch for the replay. And any type of questions, feel free to type on the comment section below, or you can always contact us on our number and for free consultation to our website www.wycotax.com. Just a disclaimer, has been prepared for informational purposes only. It is not intended to provide and should not be relied on for tax investment, legal or accounting advice. Examples and other materials in this webinar are only for illustrative purpose and should not be relied for technical answers. Wyco Tax is a virtual outsourced accounting and wealth planning company. We are not associated with any institutions on this presentation and is a private business providing resources for small businesses. So we're going to go over with analyzing the current trends, the role of annuities in a diversified retirement portfolio, and understanding the fees, risk, and benefits associated with this market. So these are meant presentation are meant for small business owners, high net individuals making 6 digit a year, people that are receiving 1099s, have S corps, LLCs, partnerships with or without employees, e-commerce, non-accountants, and high income professionals. If you fall into this category, this might be a good part of your investment or planning for financial and business goal. So, what are the current trends on the annuities? I'm trying to load this. All right. So there are different type of annuities. We have the fixed, variable, and index annuities. So what are the different in terms of the trends? The fixed annuities, it increase interest in a multi-year guaranteed annuities, or what you call the MYGA. With rising interest rates, MYGAs offer fixed returns over several years, attracting those seeking predictable income with higher yields than traditional savings accounts. Whereas the variable annuities, it's a growth of investment focus. Now they are focusing now a wide array of investment options, including the ESG, which means the environmental, social, and governance funds, to appeal to a more socially conscious investor base. However, the index annuities, on the other hand, popularity of the hybrid designs that combine traditional fixed index annuities with features like downside protection and a portion market like gains, offering a balance and growth potential and safety. So basically, there's a cap, there's a ceiling, and there's a flooring that your investment will not gonna go. Will not gonna lose that money in certain percentage. That's what you call the flooring, but it also does not gonna grow your money in certain amount. So that's the reason there's a ceiling. So this is more the low to moderate risk of investment. This is not as aggressive as other type of other alternative assets. The three key roles of annuities in retirement are as follows. So this is a guaranteed income stream. The annuities provide reliable source of income which lasts for life. Depending on the type of the annuity, that's why it's better to consult with your financial planner. This can help cover essential expenses in retirement, offering peace of mind against outliving your savings. So that's why right now we're working with a doctor. He's planning to retire in next 5 years, but he wants to know his option regarding his 401k. Then it also gives you a principal protection. Certain types of annuities, such as fixed or index annuities, offer protection against market downturn. This makes them valuable in preserving capital while still providing potential growth, especially in low risk portions of a portfolio. This is an alternative with the 401k, because 401k, we've heard a lot of clients like nurses and doctors that they lose their money and their principal that they put their money. But the annuity, if you put 1 million there, you are rest assured you still have your 1 million. The worst thing scenario, it doesn't grow, but you still have your money there. All right. And then number three is the tax deferred growth. The same thing with 401k. Annuities allow investment to grow in the tax deferred until withdrawal begins. This can enhance growth potential, especially for those looking to delay taxes until retirement when they might be in a lower tax bracket. This is a tax deferred, not tax free. There was a question. They said, "Oh, why not? I just put my income to high yield savings account." But the high yield savings account, you could also be taxed on annually with the interest that it's making. Compare with the annuity, it does not. The longer that you put your money there, the tax is not being applied in a year-to-year basis. Only from the time that you withdraw or you use it as a retirement income. Now, let's go over what are the risk benefits fees of annuities. We mentioned some of the current trends in terms of the liquidity risk. Annuities often come with surrender periods ranging from a few years to a decade, during which early withdrawals can trigger surrender charges. Access to your money may be limited. That's why when I'm telling to my clients, this is not a bank. Annuities, and when you put your money in any type of investment, it's a long-term run, maybe 5 years or more. So that's why we recommend our clients do not pull out, do not put money here that you will be needing on the next 3 years, because this is more like a mid-year, this is a mid-term long-term financial planning where you- looking forward to use the money after 10 or 15 years. Okay, so only put the money that you think you will not be needing in a monthly basis, either $500, 10,000 of one-time payment, doesn't matter. Make sure that when you put your money here, it's something that you're not gonna be short paying your essential bills. The market risk for variable annuities. So for variable annuities, returns depend on the performance of chosen investments, and there's a potential for loss of principal in down markets. And then inflation risk for fixed annuities. Fixed annuities provide a guaranteed return, but they may not keep pace with inflation, ending eroding purchasing power over time. So it's better for you guys to consult with your financial planner. You might have one or two, and then you can compare what are their findings in terms of your investments. You can meet them even like in twice a year basis. Then let's talk about the fees. I mean, everything that you're doing comes with a price. Whether you work, you start your business, you want to go to education, you want to do other career, there's always investment. But it's the receiving end; those are what you call fees. So there are four fees that you have to expect whenever you're putting your money in annuities. Number one is mortality and expense risk charges. So this is typically a percentage of the annuity's account value charged annually, covering insurance guarantees. Number two, there's an administrative fees. This is a fee for managing the annuity, typically ranging from 0.10% to 0.30% per year. Then the rider fees. Optional riders like riders is like when you buy the burger, that's the annuity, and you put French fries and soft drinks. You put extra to get those other benefits or income. let's say we have the like guaranteed income or death benefit guarantees, often come with additional fees. It varies, usually a percentage of the account value between 0.5% to 1%. And then the other last is the investment management fees. Fee for variable annuities, there are fees for the underlying mutual funds or sub accounts, which can range between 0.5 to 2%. These are very important on making a decision on how much would be the cost of your investment whenever you put your money in the diversified portfolio. So that's why this where we're going to go over now with the benefits. So we talk about the fees and now the benefits. Of course, the top four benefits, it's guaranteed a lifetime income. Annuities, especially immediate and deferred income, whether you live at 100-year old, can provide a steady income stream that lasts for the rest of your life, helping mitigate longevity risk. Typically, the lifespan right now is at least 75 to 80 plus. We have friends that turning 95 years old already, but they still really healthy. That's why you need to have a guaranteed income for life. Number two, the tax deferred growth. Annuities grow on a tax deferred basis, meaning no taxes are paid or gains until withdrawals begin, which can help with compounding over time. The principal protection we discussed, that fixed and index annuities often principal offer principal protection, ensuring that you don't lose your initial investment even if markets decline. And then customization, annuities can be tailored with riders like that benefits, guaranteed minimum income, and long-term care options depending on your financial goals. So again, do not the rule of thumb, do not put your eggs in one basket. The Wycoco tax, we are worry-free, year-round, competitive, and on time on accounting and wealth planning services. We have a team, an ecosystem of accountant, CPA certified fiduciaries. These are partners and in-house team that you can rely that you have other people, expert that working for your account. The five benefits of outsourcing, all our operations are virtual, so you have peace of mind, save headache, save time, and save money. And then it faster access to grants and loans. That is when you are have a business. That's the reason why any investment can serve as an intangible assets that help you to get any type of money because you have assets that can be used as a collateral. The way we work with with our client is we first identify your sources of income, whether they are taxable later, or they are tax free. Then we review, then develop you a budget plan. So this is the income and expense. We need to know your monthly income and expense, and then we could do a free financial report for the next 5 to 7 years. So you have like a roadmap where you will put your money diversification, because the goal of financial planning, it's a universal, it's whatever your income minus savings and investment equals expense. Again, whenever you're doing your financial planning, whether it's business or personal, it should be income minus investment and savings equals expenses, so enable for you to really live within the means of your income. The wealth planning journey of we discuss about the financial possession, if ever, what other cover benefits that our services cover or offers when you have different type of products like IUL, Index Universal Life Annuity, short term insurance, with positioning yourself right now financially, knowing how much you can put and deciding more objectively that rather than emotional, making sure that you still have money to pay the bills, but at the same time you're parking your money that could use when you want to retire at the age of 60 or 65. Then also legacy planning. Our goal, the wealth planning journey aims to make sure that your beneficiaries, your spouse, your family members will not be in financial distress. This happened to a lot of celebrities where they ended up paying so much taxes, the inheritance and probate tax, because they did not plan really well the inheritance money that they're going to receive from the head of household. And income replacement and other financial needs. So we discussed the older we get, the less active income we're capable of. But if you have kids, this type of products can also use like Index Universal Life, Section 529, Section 529. 529 plans can also be used for college funding. It also can cover the mortgage and other debts, business succession planning, because there are type of insurance that there's a buyout of the partners, there's a key man, there's a what do you call that, the executive bonus. So those are just other use of the insurance. A lot of people thought it's just for life and death, which is wrong. This is only not for death and living benefit. And then the other thing is estate tax coverage, where inheritance tax can be, you can be protected, but it needs, you need to have a team like financial planners and accountants and able to manage your own investment. So you can connect with us. Feel free to connect on our YouTube or website, and Facebook. We also have on our Instagram for free consultation. Again, so that would be all and the summary of our presentation for today. I hope if you learn something, feel free to connect with us. If you have further questions, we are here to give you a free 30-minute consultation. Again, I'm Chris Wycoco. We have the same topic on the 4th September. It's a fourth Tuesday of the September. We are going to post it on our Eventbrite. We also have it on our Facebook. So if you want to be in person, we're going to do the replay in our office here in Dallas Galleria Tower, Galleria Mall. So if you have further questions, feel free to reach us on our information. Again, thank you so much for watching. I'm Chris Wycoco.